I've never said this publicly, but the Boston housing market just shifted in a way that makes the next 90 days more important than the last 3 years combined. For the last few years, Boston's market has been driven by the same forces: not enough homes, too many buyers, and pricing that felt untouchable. But what's happening right now isn't just another seasonal slowdown. It's a real shift in behavior, both from buyers who are suddenly more decisive and sellers who are realizing that they no longer have unlimited leverage. And here's why this matters. Moments like this don't last. When a market pivots, the people who move early get the advantage: better pricing, better terms, better outcomes. The people who wait for more clarity usually miss the window entirely. This next 90 days is going to determine who wins in 2026 and who gets stuck reacting to changes they didn't see coming. I've spent nearly a decade helping people buy and sell in Greater Boston, and I track the market daily: the data, the psychology, the on-the-ground behavior. When I tell you something has changed, it's because I'm seeing it play out in real time with buyers and sellers across the city and the suburbs. So here's what we're going to do. I'm going to break down exactly what changed, why it's happening right now, and what it means whether you're buying, selling, investing, or just trying to understand where Boston is heading. And I'll give you the real strategy, not just the headline version, so you can make smart moves instead of reactive ones. So let's get into it. So what changed? Let me break this down into specific behaviors that I'm seeing in real time. First, buyer behavior isn't passive anymore. For the last couple of years, buyers were either completely sidelined or jumping in with panic urgency because they thought they'd been priced out forever. Now, buyers are coming back with strategy. They're not waiving inspections blindly. They're not throwing offers at everything. They're being selective, but when they find the right home, they're moving decisively. There's a completely different energy than what we saw in 2024 and most of 2025. Second, sellers are losing emotional leverage that they didn't even realize they were relying on. In a market where inventory was nearly non-existent, sellers got used to buyers being grateful just to get a showing. That psychology is shifting. Buyers aren't desperate anymore. They're evaluating. And sellers who priced based on what their neighbor got 6 months ago are watching their homes sit. Third, the attitude around home inspections is rebalancing. We went through a phase where buyers were waiving inspections just to compete, and that's changing. Buyers are protecting themselves again, new laws have been put into place, and sellers are adjusting to that reality. It's not extreme in either direction anymore, it's just more balanced. Fourth, the gap between condos and single-family homes is widening. Condos are moving differently than houses right now. Buyers looking for single-family properties still face serious competition, but the condo market has more breathing room. That divergence is real, and it's affecting pricing and days on market in different ways depending on what you're buying or selling. And finally, the momentum between suburbs and the city is in a new phase. For a while, the suburbs were the clear winner as people chased space and value. Now we're seeing a rebalance as lifestyle priorities shift again and certain urban neighborhoods regain momentum. Here's the key message. This isn't a crash, this is a recalibration, and recalibrations quietly reshape market power. The question is whether you're positioned to benefit from it or whether you're going to keep acting like it's still 2024. So why now? Why is this happening in 2025 and not earlier? There are 3 major forces driving this shift, and they're all converging at the same time. Interest rates and economic sentiment. Rate cuts have stabilized buyer psychology. For the last few years, buyers were dealing with payment shock. They'd run the numbers and realize their monthly payment was hundreds or even $1,000 higher than it would have been just a year earlier. That shock kept a lot of people frozen. But as rates have come down and stabilized, the psychological barrier is easing. Buyers who sat out in 2024 and 2025 are re-entering the market with clarity. They've had time to adjust their expectations, save more for a down payment, and figure out what they actually want. They're not panicking, they're planning. Boston local drivers. Boston's economy is strengthening again in ways that directly impact housing demand. Major employers are expanding, biotech is stabilizing after a rough couple of years, universities are hiring, hospitals are growing. We're also seeing lifestyle migration from places like New York City and DC pick back up. People are realizing that they can get more space, better quality of life, and still have access to a world-class city. And then there's the generational wave. Millennials are aging into move-up years. They bought their starter homes or condos 5 or 6 years ago, and now they need more space for growing families. Gen Z is entering the market for the first time, and these aren't small trends, they're structural shifts in demand. Inventory pressure. Inventory has increased slightly, but it's not enough to call this a balanced market. What's happening is new construction is helping just enough to create movement. Buyers have more options than they did a few years ago, but sellers still aren't flooding the market. And here's something interesting. Sellers are testing the market earlier in the season than usual. Normally, we would see a big listing surge in March and April, and this year we're seeing motivated sellers planning to list in January and February because they know competition for attention is lower earlier in the year. All these factors are converging right now, and that's why the market feels different. It's not one thing, it's everything shifting at once. If you're a buyer, this is actually the best opportunity that we've had in years, but only if you understand how to use it. You have more negotiation power than you realize. In this climate, terms matter more than price. Sellers are more willing to negotiate on things like closing costs, repair credits, and rate buydowns. Creative deal structures are back on the table. If you're competing with another buyer and you both offer similar prices, the one who structures a deal in a way that makes the seller's life easier is going to win. That might mean flexibility on the closing date, fewer contingencies, or a faster timeline. Think strategically, not just about the purchase price. Focus on value pockets, not headlines. Boston's micro markets matter more than ever. There are neighborhoods where pricing is lagging behind demand, and those are your opportunities. Don't just follow the headlines about what's hot. Look for areas where the fundamentals are strong, but pricing hasn't caught up yet. That's where you build equity over time. Timing advantage. Early season listings are your friend. Sellers who list in January, February, or early March are often more motivated than sellers who wait until peak spring market. You also have the opportunity to have off-market conversations, homes that haven't hit the MLS yet. And if you're a move-up buyer, you can actually have leverage right now because you're both a buyer and a seller. You can structure your offers in ways that account for both sides of your transaction. And here's the key point. This is the best moment for strategic buyers since 2020, but it's not a moment for casual buyers. If you're not clear on what you want, where you want to live, and what you're willing to pay, you're gonna get outmaneuvered by buyers who are. If you're watching this video because you're considering a move to Boston or move within Boston, I've put together a free relocation guide that breaks down neighborhoods, commute times, lifestyle fit, and realistic budget expectations. It's really the framework that I use with my clients before we even start looking at homes. You can download it using the link in the description below or scan the QR code on your screen. It will help you make sense of everything that I'm about to cover in the rest of this video. Now let's flip the perspective. If you're a seller, you still have advantages in this market, but they're not automatic anymore. Pricing power still exists, but it's not endless. Overpricing risk is significantly higher in a recalibration market. Buyers are punishing stale listings again. If your home sits for 3 weeks without strong activity, buyers start to wonder what's wrong with it. Don't price based on what your neighbor got 6 months ago or what you think your home is worth. Price based on what buyers are actually willing to pay right now in your specific micro market. This is so key. Prep matters more than it has in years. Staging, pre-inspections, repairs, and lifestyle marketing all matter again. In a market where buyers had no options, sellers can get away with doing the bare minimum, and that's over. Buyers are comparing your home to other options, and if yours doesn't stand out, they'll move on. This is where strategic positioning makes a difference. How you present your home, the story you tell, the lifestyle you're selling, this is what gets buyers emotionally invested. Listing timing is now a strategy, not a guess. There's an early year advantage right now. Listing in January or February means you face less competition from other sellers. You're not fighting for attention in a crowded market. You also want to avoid inventory clusters. Don't list the same week as 3 other homes in your neighborhood. And if you can leverage early momentum, you're more likely to get multiple offers and drive up your price. The bottom line for sellers is you can still win in this market, but you need to be intentional. The days of throwing your home on the market and watching it sell in 48 hours are gone for most price points. Now, let me tell you what I think is going to happen for 2026. This is where I'm going to give you my real opinion based on what I'm seeing on the ground. Prices aren't dropping. Let me be clear about that, but they are stabilizing. The reason is what I call the iron triangle: low inventory, high demand, and strong incomes. Boston's economy is strong. People who live here make good money, and there's still not enough homes. That competition doesn't lead to price crashes, it leads to stabilization and slow, steady growth. Don't expect dramatic price cuts. Expect prices to flatten out in some areas and to continue slowly climbing in others. Rate cuts are going to create waves of temporary competition. Every time rates drop, you're going to see a surge of buyers jump back into the market, and that means that 2026 could feel like mini cycles throughout the year. You might even have a hot month, then a slower month, then another hot month. It's not going to be predictable the way that it has been in the last few years. Certain neighborhoods are going to benefit more than others from lifestyle migration and new development. I'm seeing strong momentum in places like Arlington, Melrose, Watertown, and parts of Charlestown, Brighton, and Jamaica Plain. These areas offer a mix of affordability, accessibility, and quality of life that aligns with what buyers want right now. If you're investing or looking to buy, pay attention to these pockets. Move-up buyers win in this market because they can leverage both sides of the transaction. Early sellers win because they avoid spring competition. Long horizon investors win because Boston's fundamentals are strong. And relocators who move before Q4 win because they get better selection and less competition. So who struggles? Emotional sellers who price based on feelings instead of data. Buyers expecting 2020 pricing, that ship has sailed. And investors who don't understand Boston's micro markets. This isn't a city where you can apply a one-size-fits-all strategy. Every neighborhood operates differently. Let me break down what you should actually do depending on where you are. If you're a buyer, get pre-approved early. Don't wait until you find a home you love. Tour neighborhoods, not homes. Spend time in areas that you're considering. Walk around, get coffee, see what it feels like, even visit at night. Identify your top 3 value pockets, the neighborhoods where you see the best opportunity, and act before the next interest rate shift. Timing here really matters. If you're a seller, prep now. Don't wait until you're ready to list. Start getting your home market ready today. Get market data by micro neighborhood. Understand what homes like yours are actually selling for in your specific area. Price for momentum, not ego. Your goal should be to generate activity quickly, not test the high end of the market. And use lifestyle forward marketing. Buyers don't just want to see your home, they want to imagine their life in it. If you're an investor, focus on neighborhood fundamentals. Look at job growth, transportation access, development pipelines, and quality of life. Cash flow in Boston is a long-term play. You're not going to get massive cash-on-cash returns year one, but the appreciation and stability make up for it. And leverage micro-market intel. The more you know about specific neighborhoods, the better your investment decisions will be. If you want clarity about your situation, whether you're buying, selling, or relocating, the best next step is a quick call with me and my team. We'll help you map out the right strategy based on where you're at and where you want to live. All of our contact information is in the description below. And if you're not ready for a call yet, that's completely fine. Your next best step is watching this video right here. Top 10 questions about living in Boston. It will give you a deeper understanding of what it's like to actually live here, the stuff people don't tell you when you're searching online. I'll see you in the next video.